Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on trading risk management. Before we begin, if you're new to the industry, regardless of whether you want to be a day trader, swing trader, options trader, it doesn't matter. The most important concept to trading is risk management, right? We all want to log into our brokerage accounts, make trades, make winning trades, make money. I mean, who doesn't want to make money, right? That's the whole purpose of getting into the stock market and trading is you want to make money. The problem is that most traders don't realize is risk management is even more important than going in and learning technicals and learning how to trade and all that stuff, right? Because if you learn all the technicals and how to trade, but you don't know how to manage risk properly, you're not going to be a sustainable trader long term. So that's where you'll hear me and our community say over and over and over when we're teaching, it's all about practicing, becoming a comfortable trader. So if you're new, to the industry, like with anything, right? If you want to go get a college education, you're not going to get that college education that might take 4 years, let's say your typical college education. You're not going to get your degree in one semester, right? It takes 4 years. And then obviously there's extra schooling as well. But the whole point, what I'm trying to make is that it takes time, right? So when you're learning a new career like trading, when you're really putting a lot of money on the line, it's very risky to just go in and, trade with real money before you ever practice in a virtual account, before you set up, proper risk management strategies to sustain yourself long term. It's not going in and saying, let me buy XYZ stock and let me hold it long term. Let me just buy it because there's news on, CNBC or Cramer or Bloomberg that, Apple or Facebook or gold or Bitcoin is hot. So let me go buy it, right? Number one, you have to understand and know support and resistance levels, where to buy low, when to sell high, where to buy at support, when to sell at resistance. But even more than that, going into depth is understanding, risk management with stop levels, with how much am I willing to risk? What is your risk to reward ratio? If you want to have a sustainable trading future, you want to have at least a 2-to-1 risk reward ratio when trading at minimum. And so what do I mean by that? What I mean is if you are risking 10 cents, meaning if you have the potential to lose, let's say 10 cents on a trade, you need the potential, again, because there are no guarantees, you need to have the potential to at least make 20 cents. So just because something is looking good to trade, it doesn't mean the risk to reward ratio is good. And many traders will just go in, or especially even day traders or new day traders, they'll join somebody's, chat room and, the guru is getting into a trade and they're buying. So the new trader's like, oh, let me go in, let me buy that stock because XYZ guru just bought it. But they have no clue what their risk to reward ratio is. And they're copying, other traders and they're just getting in blind, and that's how they get burnt, right? Every single trade that you make needs to have an entry and exit strategy. So you need to know when you're going to enter, where you're going to exit, and then your profit or your risk to reward ratio. So I'm going to put this up over here for you. Thinkorswim doesn't have the best, they don't have the best drawing tools or to write in, but I'm going to go to text. We're going to do a little text box right here. And I'm going to let me just do this. Scroll out and we'll do it right down here. So you want to have at least a 2-to-1 risk / reward ratio. So if you're risking 10 cents, you need the ability to make 20 cents, or the potential, right? If you're risking $1, you need the potential to be able to make $2. This, I can't stress this enough, how incredibly important this really is, because if you don't do this, you're not going to be able to sustain yourself long term. Every single trade that you make needs to have, at minimum, ideally, you'd like to have 3-to-1, 4-to-1, 5-to-1, but at least, at minimum, 2-to-1 risk-reward ratio, not ration, I don't know why that's not, why is that not working right here? Hold on one second. All right, I fixed it. I'm not the most technical, the technical person, but if you want to know how I just actually fixed it, just right click on the box, edit properties, and then you can go in and change it. And then I'll put the alignment arrow that's on. I'm going to put it at the bottom so it'll show up. There we go. So that's better for my OCD. So 2-to-1 at minimum profit loss ratio. And you need to know that on every single trade that you make, regardless of whether you're day trading, swing trading, options trading, it's so incredibly important, right? This video is not going to be on candlesticks and technical analysis and all of that good stuff. We have our courses and our resources and our website to help you out. But I really want to stress that 2-to-1 risk reward ratio is the minimum and always that you want to make on every single trade. Ideally, if you have a 3-to-1 or 4-to-1 or 5-to-1 ratio, it's going to be much better. So you have to know, again, candlesticks, patterns, reversals, when something, when you're going to enter into a trade and when you're going to exit a trade. All of that is extremely important. But before you even get to that point, you need to have the concept or understand the concept of proper risk management and having at least a 2-to-1 risk to reward ratio. So never enter a trade. I'll say it over again. Never enter a trade without having proper entry and exit strategies and having at least a 2-to-1 risk reward ratio. So if you think you have the potential to, like the trade looks good, you find your entry and you want to get in, but you're risking, let's say 20 cents, but you only have the ability to make 10, that's a terrible risk reward ratio. So, and that's what many traders do. They get in, they trade blind, they follow a guru in some chat room. They don't know what their exit strategy is. And then that's how they blow up their brokerage account. That's actually what, unfortunately, most new traders do. They get in, they trade blind, they copy a guru, and then they end up failing and blowing up their brokerage accounts because they're not, again, number one, managing their risk, and they're rushing, and they're all about trying to make money before they're trying to manage risk. So risk management, the absolute most important thing before you do anything with trading. And that's why we always recommend, trading in a virtual account first. Make a couple hundred practice trades. We say make a couple hundred over a few months. You can see us in our trade room. We all help out each other every day. We're going over real-time support resistance levels. So if you want to watch us, stream live, open up, a virtual account with something, a company like Thinkorswim, Interactive Brokers. Watch us chart and teach real time and come in. Like you'll see, I'm logged into my virtual account within TD right now. You can practice buying and selling. You can see like, oh, this is an ascending triangle, flat top break. Maybe I'll go in and I'll, buy. If let's pretend it was back here, let's say you'll buy at the break here. You'll practice getting in, getting out. If you purchase on the top of this flat top break, where would you exit, right? So you're going to say, well, what's my exit strategies and where would I put my mental stop level? Somewhere down here or below, if it failed, probably somewhere right down here in the ascending triangle. And then if you got in at the break of this ascending triangle above it, when would you exit? Would you exit out here and take your profit levels, or would you wait for a candlestick close below the moving average lines? Those are all of the things that you really have to think about, right? So if you're new and you're watching this, and you don't know what I'm talking about, that just means you need to practice more, you need to study more. And the great news is we have lots of resources on our website to help you get started with our courses as well. So basically, in a nutshell, the most important part and aspect of trading is risk management. Number one, practice in a virtual account, have at least a 60 to 65% win ratio over the course of, 200 to 300 trades. Once you have that with tracking each and every trade on an Excel spreadsheet. So once you've done that over the course of 2 to 3 months, you've made a couple hundred trades, you have a 60 to 65% profit loss ratio, you're profitable. Then what you want to do is then start slowly scaling your way up with a real account. If you're going to trade with your normal position shares would be, let's say 1,000 shares, then start off with 100 in a real account, right? And when you're using your virtual account, only trade with 1,000 shares. We see so many people that'll come into the industry and they'll be like, oh man, my my brokerage account gives me, my virtual account gives me $1 million. Well, and I just made $200,000 today. Well, you're never going to do that in the real world, right? Because trading with real money is going to come with emotions that you'd never even imagine, right? So that's why we tell people, treat your brokerage account or your virtual account exactly 100% the way you would with a real account. So come in, and if you're trading like a company like Fran, and you're like, normally I would buy 1,000 shares, with real money. Trade with 1,000 shares. Don't buy 10,000 or 20,000 shares, because it's not realistic. So again, 2-to-1 profit loss ratio or risk reward ratio, 2 to 300 practice trades at least over the course of 2 to 3 months. And then when you start trading with real money, if you're trading with 1,000 share positions, start off with 100, right? Do that for a week or two. Make practice trades. If you have a 60 to 65% win ratio, scale up to 250 shares, then scale up to 500, then 750, then 1,000. All about managing risk. If you do this and you do a 2-to-1 risk reward ratio, you practice in a virtual account, you get really good, you scale your way up with trading, that's how you're going to sustain yourself long term. Don't ever get into the industry and trade with real money, trade blind, and don't go following gurus, that are telling you when to enter and exit. If you are going to follow a guru, use a virtual account if you're trying to practice. Like if you want to see when they get in and when they get out and you're learning to practice, that's a different story. But if you're looking for a guru to call out trades to you because you don't want to do the work yourself, that's how you're going to blow up your brokerage account, and you're never going to make it long term as a trader. Just telling it like it is. We wish there was an easier way, but trading is hard. It's an extremely profitable industry if you have the proper mindset and you're able to sustain yourself long term with using proper risk to reward strategies. So hopefully this video on trading risk helped you, and we will see you in our community. Enjoy.